Welcome to TradersPost office hours for April 22nd, 2025. I'm Tom Hartman, marketing manager here at TradersPost, alongside Mike Christensen, co-founder and CSO, and John Wage, founder and CEO. We're always working to make TradersPost the best trading platform in the known universe for automated trading. And for that, we need your help, your questions, your feedback. So thank you very much for taking the time to be with us here today. How's it going, gents?
What's up, guys?
Doing well.
Happy Bitcoin Day. Happy Bitcoin Day to you as well.
Definitely a crazy rally in crypto for sure.
Ooh, wow. I didn't even look at it until now.
If there's anything that feels better than a crypto rally, it's calling the crypto rally at the bottom. I don't know. That just feels really good to me. I know it feels pretty good. All right, guys. We have some nice questions and feedback this week. We also have Reddit Corner coming up at the end. But I did want to ask one thing, which is about Blueprint coming up this Thursday. I want to pitch one of two ideas. You let me know which ones you like. The first one is the idea of basically a dragon portfolio idea structured within TradersPost. So the idea here is that we would have one strategy for equities, bonds, gold, volatility, and I forget the last one is. But basically a strategy for all of those, and then they would each be working individually, but they would all be going through TradersPost within the same account. I like that sort of idea.
Yeah, love this idea. And I know we've covered how you've been doing a lot of work lately to track multiple symbols on the same chart in TradingView, but essentially send over those alerts to TradersPost. And we do have some percent of equity features that allow you to choose percentage-based entries. So if you needed to balance a portfolio of the ETFs that you're using for that portfolio, assuming you're using ETFs to track gold, right, in the bond market, or are you trying to get into futures, a combination of stocks and futures?
Actually, I would have done futures. I wouldn't have done the ETFs, but you can do either.
Yeah, you can do either.
Yeah.
Okay.
But the idea here would be that the instead of it all being in one strategy script, you would actually be running multiple ones. But what the idea is that you're using all 5 of those within the same brokerage account.
Right. Yeah, totally possible. Yeah. And that's where I would use the percent of equity feature, assuming that you just keep it in ETFs. That's what I would challenge you to do, is stick with the other market exposures using some kind of tracked ETF. That way you can do percent of equity and do, I don't know if it's weighted or equal weighted or how it's determined, how your position is determined, but at least you have a little more granular control that way.
Yeah, that sounds fun to me. I've always loved the Dragon portfolio. Anyone who says, hey, what would you do if you had a portfolio that had to last 100 years? Go, okay, that's a pretty interesting exercise.
Nice.
The other idea would be how to backtest a strategy using Polygon, Polygon.io for both, let's say, equities and options, and then how you would then use that same system to now send signals to TradersPost, a custom solution for yourself, because we've touched a lot, we've done a lot on TradingView, a little bit on TrendSpider, but it might be nice just to show how you can use Cursor AI to set up a backtesting solution for using Polygon data and then send those signals through your own custom solution to TradersPost.
I think that would be a cool one. We haven't, just because we haven't done it yet.
Right.
Yeah.
We've done so much TradingView content. I feel like we can even open it up to the office hours crowd here. Are you guys interested in more, manual approach, something that's more in your own environment, getting the data from Polygon and generating your own signal, or is more TradingView content worthwhile? Let's make a decision at the end of the show, Tom.
Well, let me sweeten the deal here.
Sure.
I will be using Cursor AI for this because if you guys remember past fiascos on some of the Cursor AI content for Blueprint, they've upgraded the system. So now you actually have way more control. I find it works way smoother for things like this. And so we'd be using Cursor AI to integrate a TradingView charting library with the Polygon information. We'd be doing both. I think we'd be doing both options and equities, and displaying that in a way. So it wouldn't just be like, in a terminal. You'd actually have a Python site stand up for that to see what that looks like. It'll be rough, but I think going through that process would be pretty interesting and pretty fun for people.
I think my vote's already on the Polygon side because it's definitely an uncovered area. We haven't done a lot of work to show how you can stand up your own data source and generate your own signal and your own coding environment, and how easy it is to still send over signals to TradersPost.
Perfect. Excellent. That'll be fun. We're only going to have like 2 years worth of data. I didn't sign up to the top tier plan for Polygon, so you guys will forgive that, but you can always do that yourself. All right, so we'll keep that on the table, and if anyone says nay for that, we'll come back to that later on. For now, love to tackle some of the questions, feedbacks, and comments from the week past. Let's start here with, well, this is a bittersweet one. We've already answered this before, but let's just mention it here. Hello, I was wondering if there's a way to link a Topstep or Apex account. I'm in BC, Canada. Thank you. This is one of those things that touches me. I'm a Canadian, and the idea is that there's not a huge amount of options for us to deal with prop firms. So I was wondering, I think Topstep does have the ability for a Canadian to sign up to it, but I think it's only, if I'm not mistaken, I think it's like one of their products. It's not actually the Topstep prop firm account, because when I tried to sign up, I couldn't get through. Am I wrong?
Are prop firms limited by country? Because it's paper trading and it's not real. So are they?
I don't think they
limited?
can open up a TradeView account.
That's right.
Is my assumption. So I'm wondering who the vendor is that supports Canadian Topstep accounts if it's not TradeView.
Well, I was able to sign up with Topstep, but it wasn't. I should have written it down. There was like some other kind of thing I could have with Topstep. And I was like, oh, I'm all ready. I'm going to be signed up with the prop firm account. And then turns out, wah.
Does it go through Rhythmic maybe?
I think it was Rhythmic. I didn't want to say that aloud. It sounded like a fever dream, but Rhythmic is does sound familiar.
Well, I know Rhythmic is their other broker-dealer partner, and it's possible maybe Rhythmic covers the Canadian regulatory domain. So if that's the case, we don't currently have a Rhythmic integration, but certainly we'll explore it.
Right. Someone told me you could also, what's that? Have you seen those IDs you can get from like Palau or whatever that allows you to have a basically an ID from another country? That's just like, selling out their citizenships in order to for people like this, like an island somewhere. And with that, then you can open up certain types of accounts and do certain trading. But as far as I'm concerned, the Canadian Revenue Agency is not so keen on you finding workarounds on Panama Canal Islands or whatever in order to try to figure out how to trade. So it's not something I'm eager to jump into. All right, next up here. I'm trying to connect my trading bot, but every position returns a fail status with no explanation. Please clarify why the positions are failing and what I should adjust. So I'll just jump here and say, the answer to this is that there is an explanation. This is the reason I wanted to bring up this question, because it comes up sometimes that people go, there's no reason for why this failed. And in fact, I've yet to see one circumstance on TradersPost where something failed and it didn't point to what the reason might be. In this particular situation, it's a liquidation only. So the person didn't understand that was like a message from the broker, but there's always some response and some message there.
I'm guessing they were looking at the list and it says failed, but they didn't actually click the trade to see why it was failing. You can also there's an icon next to the failed status that you can hover over that also shows you the reason. You'd have to look to, you'd have to look.
There's I think there's a little bit of a two-step process. First, we list all the trades. Then there's details around each trade. So you would have to go a little bit further, as these guys are saying. Tom, to your point, while most of our trades, I would say 99% of them have a decent explanation, occasionally we do run into some really rare and unique scenarios where the trade didn't behave properly, and we catch those as an organization, and we work on improving the way the messaging should work. We've had use cases where there are certain order statuses we didn't anticipate that led to strange trade behavior, things like that. But whenever we find those, we catch those, and we usually patch a change almost immediately for those. John, didn't we have one the other day for E-Trade?
Yeah, I mean, they're super rare. We're talking like
one in 10,000 trades.
Yeah,
kind of thing.
like
maybe
super rare. And then once it happens once, it never happens again.
Exactly.
For that particular case.
Yeah. So yes, to your point, Tom, 99.9% of the time, there's going to be a very good reason why the trade failed.
Excellent. All right, this is a question that John, I think you answered in Discord, but the person was saying, I double checked the alert. It specified buying one NVIDIA put. Yet TradersPost bought 11 same-day calls. I lost about 20% of my account. What happened, and how can we ensure this never happens again? This is urgent. If you don't remember what the answer was that the user sent a JSON message for the options using not at all our documentation. The properties weren't ours. They just put in what I guess felt right, or maybe an AI gave them, or something like that. But it was not any of our properties, or it just had enough there to buy position, but nothing to actually manage the position in any way. So this ended up being like a user error. Totally understand, but I just wanted to bring that up, that our system doesn't just necessarily randomly buy 11 calls for.
So did he have a quantity of 11 in his JSON?
He had like a. I didn't say the JSON over here. It didn't say 11 within the JSON, but I think it had to do with how his the strategy position size was set, that it actually calculated a size for the user. But what they had put within the properties was something like that would have theoretically limited it if that's what those properties did.
Yeah, I think this is another good opportunity to remind people that there's a relationship between the JSON message itself and your individual strategy settings. Your strategy settings have the ability to use the signal rather than use the setting itself. And there's a bit of a hierarchy of these relationships where first we check your JSON message, then we check your strategy settings. If you've indicated you want us to use the strategy settings, we will. So this could be a scenario where you sent a quantity of 1 in the JSON message, but then in your strategy settings, you're ignoring the signal that's coming through, and you have, let's say, use 20% of my account balance to execute the trade. So it did the calculation for the size, determined it's 11, and entered into a position of 11 contracts for that particular trade.
And I'm assuming this person probably didn't test it in a paper account first. Like that
I was just about to say that.
Yeah, always test on paper.
Yeah, it's both for just learning the system. Like you always want to verify. Like TradersPost is going to work the way it's supposed to work, and you want to make sure that the way you're expecting it to work is the way TradersPost actually works.
That's right. All right. The more strategy bots I run, the closer I will get to market returns or exceed them, correct?
Interesting. That's a bit of an efficient market hypothesis question, or basically portfolio optimization question. I guess your question is, if you diversify your strategies, are you more likely to get something closer to the average of the market? And I think it really depends. In many cases, many people are using leveraged products like futures, in which case you could get the average beta or the risk you would normally see in the market, but that leverage gives you a higher overall net return. You're taking more risk in order to get there. So did the user offer more context around this one?
Well, the user was having an issue with when they were trying to pick one or two strategies like of their own, they weren't working. They were picking strategies off the shelf, and the idea they were saying is that, hey, if I buy 11 strategies and run them all, am I going to get better results than if I just run one or two?
They could all be bad strategies without any positive expectancy. So as a result, they're all losers, and you lose your entire account. There's no guarantee that just because you diversify, you're automatically guaranteed something closer to the market return. If the strategies themselves don't have an edge, then unfortunately, all of them will fail.
And they have to have some kind of like differing characteristics, right? Like buying the Qs and buying SPY, like it's diversified, but there's so much overlap between them. They're the same thing, basically.
Yeah, there's a high correlation between those two. So you'd want to run, if you're really diversifying out, then you'd want to diversify into other markets. Put a little bit into like a bond ETF strategy, or maybe even treasury yields in futures. Maybe have a VIX strategy running. Like we were talking earlier about the Dragon portfolio. There's a reason that you build a portfolio that exposes itself to multiple markets, because of their uncorrelated or low correlated characteristics. That gives you true diversification. But if you're trading the SPY and then QQQ, there's like an 85% correlation typically between those two instruments.
That's exactly the question that actually led to me wanting to do the Dragon portfolio idea, because it blows my mind how many people don't necessarily know that all your trade, for a lot of people, all your trades is actually correlated to either global liquidity or equity volatility, and that you haven't actually diversified at all. So if you have ARK, MSTR, and Tesla in your portfolio, sorry, buddy, you're not diversified. If you have these leverage plays, well, then you even have more risk than if you're just exposed to the market. But if you were just like if you had a long only bots, like you just had long onlys and there was no leverage and it was across a wide array, then yeah, you would get closer to the expected return of the market.
I think, and this makes it a little more difficult to answer. It really depends on what you're trading. If you're trading in the same instrument, but you're asking if each bot trades it a little differently, it really depends as well. You're still essentially trading the same market, but you're trading at different times. So there's going to be some overlap sometimes. At other times, it might be different directionally. So if I have one strategy that's decided to go long and the other decides to go short, well, obviously those are inversely correlated. One of them is going to win, one of them is going to lose, presumably. So that can kind of help in that you have some different exposures to the market, different ways to express a view on the market that can lead to different outcomes. But at the end of the day, if you're going to build some kind of intraday or multi-day strategy that trades ultimately the same instrument, just make sure that each strategy definitely has a robust backtest completed on it. You've tested it in a paper account and it has positive expectancy. We're looking for something that's actually going to have an edge in the market. Otherwise, there's just no point in splitting it out.
All right, next up. All right, so this is a sensitive one over here. Hi, a coder set up my algo strategies for me. Is there a way to keep them running, but revoke his access? Now, I have no comments here. Is there a way to keep them running, but revoke his access now that the work is finished? He came back once and changed things without my knowledge, which makes me nervous. Any help on how to keep the strategies working while closing this webhook access would be appreciated. I'm not very technical. Thank you. Let me just provide a little bit more background on this, as it was more follow-up conversation. So this user was actually subscribed. This user provided their webhook to a third party, a developer, who has then built a strategy and is sending signals to it. But that person would changed however way they were sending the signals over, so they weren't actually happening in the same way that the client actually expected. And so in their minds, they're thinking, if they prevent access to the webhook, that they would still to the developer, that they would still get the signal like normally, but the developer wouldn't be able to modify it. And what to explain to them is that no, the signal that's being sent has nothing to do with access or not access to the webhook. It's that developer who's sending the signal over. And so if you revoke access to the webhook, the strategy stops working.
Nothing works.
There's no more signal.
Yeah, they would definitely want to take ownership of the signal source itself. I would assume this is being generated from TradingView. It was a PineScript strategy, right?
Correct. Yeah.
Yeah. So they would want to make sure that this is running in their own TradingView account. And then they can also regenerate the webhook URL to make sure it's a fresh webhook URL. I don't know if you're aware, but in the webhook dropdown, there is a way to regenerate the URL so that the old one is now expired and no longer useful. And you just copy the new webhook URL and paste it in to TradingView's alert system. So that would take care of anybody knowing your webhook URL. Now you've created a new one that they don't know, and then you would want to make sure you're running the alerts in your own personal TradingView account that no one else has access to. But it's partly the reason that we advise people not to share their webhook URLs. Effectively, those characters in there are kind of like a password. So if you've given somebody your password, then they can continue to access your account.
I also know of some PineScript developers who they don't want to provide access to the strategy code that they wrote for a client. What they do is they stand that up on their own, and then you subscribe to their signals, and just to make sure that you don't resell the script or that it's completely in their control.
Yeah.
That is super dangerous to do.
Yeah. Anytime you're going to pay a coder for work, you want to make sure that IP assignment goes to you. In other words, intellectual property assignment is in your hands. They don't own any of your code. They don't manage the strategy, because, there's always that potential that you get it up and running and maybe that developer doesn't do PineScript code anymore, or maybe you found somebody else who works on PineScript, or maybe you decided to learn it yourself, or maybe now you're using Cursor instead and just sort of managing it yourself. At the end of the day, you want to own that code and own the environment. I wouldn't put it in the hands of somebody else.
That's right. You could always ask someone on TradingView, user on TradingView, to if they publish the script inside of the community library. Let's say they publish it and the code is protected, so no one else can have it, and there is a password or something like that to access the script, then you could still have the developer who, or you don't have access to the code, but when you add the strategy to your own TradingView, a copy of it is in your TradingView. So you don't have access to the code, but a copy is still there, and they can't modify your signal. So there's a way that a developer, the PineScript developer, can still have, they don't have to give up the IP of it, but that you have forever use to it, even if they decide they don't want to have the script, they don't want to sell the script anymore. All right. And it goes without saying, you don't want to give people your login information for your TradersPost account to log in and do anything on your behalf. Like, that's like a recipe for disaster.
You shouldn't have to do that either. Just as a reminder, we do have user management features in TradersPost where, with the right plan, you can invite access to the account to another user, which also gives you the ability to revoke access to your TradersPost account as well.
That's right. All right. Hello. This morning, a trade executed. The buy order filled, but the take profit and stop loss were rejected. My code hasn't changed, and the signal looks correct. Broker logs match previous successful trades. Could you advise what caused this and what safeguards can prevent an unprotected open trade? So this is a perfectly reasonable question. It came through, and on the surface of it, it looks like, hey, something might have gone wrong, and for some reason, TradersPost opened up the buy position, but not to take profit and stop loss. This is one of those things where I'm like, hey, did something actually go wrong? No.
Well, they were canceled, but something else must have caused those cancellations.
That's exactly right. So what happened was that the user had a completely separate strategy for the same ticker in the same broker account.
Yep.
And when they sent in the order, because the take profit and stop loss, the bracket orders were still open, those were then canceled, and the position stayed open.
Right.
I always like to use the analogy of, like, imagine two people trying to trade the same ticker in the same brokerage account manually at the same time. It's the exact same thing with software, and the strategies are basically like conflicting with each other, and they're stepping on each other's toes. It is possible to do. You just have to set it up in a way where, like, you have to disable order canceling. You have to explicitly manage quantities. But even then, there's still just risk of, like, you not setting it up. It's because it's more complicated. You might set it up incorrectly and then end up having conflicts between the strategies. You can also have more race conditions. If the two strategies are trying to do the same thing or different things at the same time, maybe one strategy is long while the other is short. You can't have box positions. You can't be both long and short at the same time. So generally, it's probably good to run multiple strategies in separate brokerage accounts if it's the same ticker, or choose different tickers if it's all in the same account.
I always wonder if this is like a contagion from crypto, because from what I remember in my brokerage accounts, I also have that restriction. I don't expect to be able to do multiple things and have the position stay segregated. But in crypto, in some ways, in some exchanges, you can. I can be long and short Bitcoin at the same time inside of the same account. And so maybe coming from that, you come into the automated trading space and you think to yourself, oh, that can happen here. But other than that, I'm not really sure exactly how people come to this conclusion that.
I don't know. I usually assume it's like a mistake, like they accidentally do it, or I don't know. Sometimes people, they've never done it before and they just try it and make an assumption. And then, you can just kind of learn that assumption was false.
Got it. All right, this is a feature request that's this is from me. I just put this in here as a topic of conversation for the Dragon portfolio thing. When we get analytics and all that, is there like a benefit? Do you guys see a benefit of being able to group strategies together as like a?
I think so. I think we would solve this with like a generic tagging system that would work. on everything, and it would just be a generic way to create tags, and you can like tag a whole strategy, or you could tag individual trades. Maybe you like tag trades by like its type of setup. I know other platforms do it that where like when it imports the orders, you can manually say this was like a gap and go or whatever. That way you can see the performance of your different types of tags.
Yeah.
Excellent. That'd be fantastic. Actually, all right. So Tom, not a stupid request. This, I wasn't sure about the end goal for this. I was wondering if this sparked anything in you guys. Is it possible to send a custom tag comment with the orders for tracking that? One can also see on the broker side. Which brokers support this at present? Is this a thing?
Unfortunately, no brokers allow any metadata to be sent. You could sort of hack it, but it would be
Binance is the only one that I know of. You can send over effectively what they call a client order ID, which is always sent back in the response. It's a string, and I think they only allow you 100 characters.
Yeah.
But it's a very, very infrequently will we see that with other brokers.
And we use the client order ID for a client.
Oh, I see. ID. Right. So we already use it for its intended purpose. Yeah. There would have to be another field they support,
and that's what I was thinking is like we could hack it where like we pack it into that ID, but like
it's not long enough.
Yeah. I generally avoid those types of solutions because like, it's just you learn over the years that whenever you try to hack something like that, it always has some kind of unintended consequence that you didn't consider. And then later you're like, why did I do that? Like I knew better. But it'd be cool. You can do it on our side. You can send any arbitrary properties. We recommend to put it in like a key called extra so that there's no chance that it ever conflicts with any new fields that we might add to the root of the JSON document. But you can throw any kind of value in there and it'll show up in TradersPost. You can't filter or search by it, but some people use it. Like maybe you have a strategy that has 5 different criteria for determining when to enter or when to exit. You could name each of those criterias and then send along that name in the JSON so you could know like, oh, this entry was triggered by criteria A in my strategy. Right. And it just helps with debugging and kind of troubleshooting your strategy.
Cool. Someone asked here, guys, I've read that TrendSpider is more focused on automation and a better fit than TradingView. Does anyone made that transition? Any thoughts?
This was in Discord, right? I think this is recent.
Oh, this came for support.
Oh, it was probably the same person. I think they asked it in Discord as well.
Okay.
I mean, I don't know. TrendSpider markets themselves that way. I think that they definitely, here's my 2 cents. Like TrendSpider launched without the ability to code strategies first, whereas TradingView was always PineScript. And in TrendSpider, you couldn't drop down to low-level code. You had to use their GUI. And it was like a drag and drop UI sort of that allowed you to like mix and match and or conditions with different variables. So you could say like, if the RSI is greater than this and this metric is less than that, you could trigger alerts. So it was easier to use, but more limiting, I would say. But now TrendSpider has JavaScript, which is just like PineScript. So you can always drop down to low-level code to write the same types of strategies that you can in TradingView. I guess one differentiator that TrendSpider has that TradingView does not is that they have more AI tools. So you can like describe your strategy in plain English, and it can generate code, but then it can also just like automatically fill out that form with the GUI with the and or conditions.
So I didn't know that.
Yeah, it's pretty new. I think it's relatively new, but like they've been building more and more features where like instead of like manually clicking the form, you can just like describe what you want to be filled in the form, and the AI just fills it out for you automatically. So like I wouldn't necessarily say that TrendSpider is more geared towards automation. Like they really do the same things, just maybe in a different way. But like the gap between what's different, I think, is narrowing every day. Like they're continuing to improve TrendSpider.
I'm more and more gearing toward because of the AI coding, vibe coding. More and more now, I'm sort of like, maybe I just use those platforms sort of like the surface ideas, but just code it directly into into Python or something like that, because I just feel like I have so much more control, so much more reliability. I mean, I say that, and now I think almost every line of Pine script that I generate now is AI generated. It's like so much better now because you're just speaking to the system and it's iterating more and more. Especially I remember I said on the previous one that O3 Mini High was the best Pine model that I'd seen from ChatGPT. But now it's like even O4 is not as good as just the regular cursor out of the gate. It's able to really interpret the things you need, edit the things that you need in a more reliable way. I just found it to be absolutely fascinating. So it's like now every platform is like useful to me now. The doors are sort of open. But as the Twitter keeps reminding me, everybody's using AI, but 95% of people don't use it properly. So I don't know. Maybe I'm just.
Yeah, I don't know. I love AI, but I'm definitely more like the AI isn't driving me. I'm driving the AI. Like,
Yeah.
It's not doing the work for me. It's auto completing what I was already going to do in a lot of cases. So it's like a productivity booster. But then I think the other major use case is like the iterative process of like having someone to talk to, in this case, AI. Normally you would go to your coworker or whoever to act as the rubber ducky. You just have someone to like say the thing in your head out loud, and just by like explaining it in plain English allows you to like surface problems with whatever you were thinking about. And AI can play that role, and a lot of times like give you better and quicker feedback. So I'd say that's like the most valuable thing for me, is just like the iteration and the feedback loop, using it to like actually develop an idea. Yeah. Not the actual coding, just like the developing of the idea.
Sometimes just having to explain what it is that you want it to do forces you to really think through the problem as well. Make sure that you've really understood the problem well, because in order to describe it, you have to understand it well. And that's where you'll run into some logical issues as well. Like, well, what about this scenario, or what about this one? And I have my ChatGPT environment set up to check me on that kind of stuff. Like, check my premises. Don't just spit out the first thing that comes to mind. Make sure that I've thought this through. Maybe the other thing is, I feel like I've moved from being more of a coder to more of a code reviewer. So I'm expecting it to be a certain thing, but I'm going to review every line of code and make sure that it actually makes sense, because it still hallucinates from time to time, or it goes backwards, especially with Pine script. I'll tell it, we're only going to work in V6 Pine script. And the next thing it gives me is some V4 implementation. That's not it. We're only working on V6. So don't expect it to spit out perfect code every single time.
That's right.
I remember at past jobs, I'd like call over my coworker and I'd be like, "Hey, come over here and look over my shoulder." And I would start explaining it, and then I'd be like, "Oh, never mind, I figured it out." Like, as soon as they got over there, it like never failed every single time.
Yeah.
I'll always remember I don't know if you guys saw the blueprint from last week, which is the when you go to the bathroom and buys Bitcoin. And I started using Cursor AI to code it, and going through the different thing and geolocation and the whole thing. And then as I was talking to it, I was like, "Hey, is there any like better way for me to do this?" They're like, "Well, you could just use your iPhone and the shortcuts app in iPhone." I was like, "Excuse me, what? You can send webhook signals from your iPhone?" I was like, "Yeah." And then it walked me through how to do it.
No way.
And
Are you serious?
Oh, yeah, you didn't see this? Yeah.
No, I didn't. I actually missed that episode. So is that how you did that?
Yeah, and so, but then I had a problem where it couldn't. You had to approve every single time when it's geolocation for where you are. You have to approve the shortcut. I was like, "And is there any way around that?" They're like, "Oh, sure. There's a thing called noise hearing or sound hearing that can detect when water is flushing. So if you detect the water flushing, then that will bypass it and it'll buy the Bitcoin." I was like, "This is unbelievable."
Wait, so I missed that episode. I saw you did it. So you actually have it hooked up to where it'll buy when you flush?
When it flushes, when my wife or Peter messages me that they love me, and when a baby is crying.
No way.
Yeah.
That's hilarious, because like, remember the original idea? I was like, I want to hook it up to this button.
Exactly.
Whenever it makes a bunch of different noises.
You are a badass.
Anyways, I was like, I'm just going to hook that button up. So if I'm just sitting here, bam, buy $10 worth of Bitcoin.
Well, not because of it. It only works on iPhone. I haven't tried it on Android because it uses the shortcut app. But what I loved is that it told me, hey, you can use this feature in there. And if you change the request from a get to a post, then you send this, then it'll actually work. I was like, unbelievable.
That's pretty cool.
Yeah. So that was like just using AI. So it's a brave new world.
Like it reliably detects the water and the flush of the toilet.
Well, if you saw me sitting there flushing constantly, you would. Yeah, it does it reliably, and because you flush and you wash your hands, you get a double buy sometimes on the Bitcoin.
So is it like generic or like you can detect? Anyway, I'll need to watch this show.
There's certain sounds you can do, like car honking, fire alarm.
So they have like some pre-built common stuff in there. Like, okay,
yeah. But when we on Blueprint, we check, like, if you go to the gym, it could buy Bitcoin. Go to the grocery store to buy Bitcoin. If you receive a text message, to buy Bitcoin, all kinds of things. So I'm just like, it didn't require any coding at all, and I couldn't believe that through coding with AI it led me to an option that had nothing to do with coding at all.
And I've obviously told you guys my Bitcoin strategy. Like I usually buy Bitcoin when I'm sitting on the toilet. And I can't wait. Hopefully it works out, but I want to write a book in the future is like how I made my millions on the toilet. By John Wage.
That's how we started the Blueprint episodes. Like, hey, this is Peter's like, you're really doing this? I go, this is John's idea. Okay. Yeah.
I've been doing it for years too, and it's worked out so far. I'm basically right. Like every day I'm basically buying like $5 or $10 worth of Bitcoin.
That's fantastic.
Worked out so far.
All right, so this last one here, someone was asking, has anyone come across any good podcasts for automated and bot trading? Please share. I just want to mention this because I think I'm just going to start a playlist on our YouTube channel of other people's videos and stuff like that are useful for somebody who wants to get into automated trading. Because I was trying to find a one-stop shop place for this sort of thing, a Twitter account, a YouTube channel, and I couldn't find it. But there are spot videos that are around that we aggregate into one that might be nice, and also tweet them out on the X them out, post them out on X with the permission of these guys. I think that might be fun.
I did have a few. Flirting with Models is actually one of my favorite ones with Corey. I can't remember his last name, but that one's fantastic. That's much more quantitative. There's also a systematic podcast that I listen to quite a bit as well, but I can add them to the show notes here.
Yeah, Flirting with Models. I love that. Oh, yeah, send that to me. I'll put that a couple of clips in. All right, let's just do. There's two Reddit posts I just wanted us to take a look at. If you'll indulge me here. The first one here is, how many of you are programmers? I'm a full stack developer with around 4 years of experience. I got really into trading about 2 months ago. Story of my life. I think day trading checks a lot of boxes, following patterns, solving puzzles, that sort of thing. With my experience as a programmer, I have no doubt of how powerful a good trading bot can be nowadays, and I have no doubt there must be thousands of those from retail. However, I can also understand that getting one of these to actually work requires a high degree of technical understanding and proficiency in advanced mathematics. Not so. You do not need a proficiency in advanced mathematics for this to work. The question is, are all the ads about trading bots scams? That's the idea here. All the ads about trading bots scams. And obviously the first comment is, yes, every one of them is a scam. How do you guys feel about that?
I wouldn't say 100%, but like probably pretty close to all of them are.
But are they a scam because, as this person says, someone down here says, if they were good, no one would do an ad for it? Is that the fact that there's an ad for them proof that there's actually nothing underneath the hood?
Well, the real problem is that they're technically technology advisors, or technology creators. They're not advisors. You'll find that in the actual investing world, if you're a hedge fund or an investment advisor of any kind, you can't advertise. So by default, anybody that has a working strategy out there is unlikely to be advertising in the first place. They want to avoid the investment advice path, and they have clients that they have to take on directly in order to kind of be protected by the liabilities that come from the work that they do. So if you're trading in one of these groups, you're by default most likely trading with somebody whose view on markets is not necessarily as a professional hedge fund manager, but has had market exposure. They have some experience doing what they're doing, and they've coded together a strategy. Another thing that I think is worth unpacking is that just because it's AI doesn't mean that it's somehow more profitable or even profitable at all. Many of the bots that out there that advertise themselves as AI bots, I don't even think have any real artificial intelligence behind them. It's just a buzzword that's used in many cases. So I am very skeptical of many of the things that are advertised out there. That said, there are some very smart market participants that have a strategy that works and have a view on markets that's consistent. I would be looking for consistency. I would be looking for a very clear track record, some evidence of the performance of their strategy. And I would always test it on paper before ever exposing any live capital to it.
Yeah, for my part, the ability to see the history of that person, especially on YouTube or on Twitter, to me is like the thing that differentiates whether the strategy is worth looking into or not. Because I now personally, after being in this now for several years, have met people who are good traders. They have profitable strategies. They've been running it, and what they like is sharing it with others. They do enjoy that, and it helps them keep themselves accountable. They enjoy the camaraderie instead of just being alone behind their screens. They're there, they're streaming, they're providing their service, and because of that, to me, so the fact that they're advertising is not, to me, a knock against them. But because it's not a physical product, and because people can delete their history or only cherry pick good trades or whatever. Obviously, like Mike said, you want to do your due diligence to make sure that your risk is low and that there's some sort of reason to believe why this one might be good or not. And don't do like what the previous comment that we saw said. Hey, if I just buy 8 of these, then chances are I'm going to do well because at least 4 of them will be good and I'll get market returns.
Sure. But then you've got most of them not working. At the end of the day, I want to see the performance. I want to see what's working, what's not, why, what's the market thesis, why do they take the trades that they do? But also, is it really just another leveraged approach to markets? In many cases, some of the advertised strategies that are out there that do some form of advertising or a lot of organic content, they all have, in many cases, they all have some kind of leverage component to them. So just be aware, if the returns seem phenomenal in the 20s or 30s or greater, it's because there's some kind of leverage component.
That's right. All right. And the last one I'm going to show here is to get you guys' opinion on this. For those running a bot, how many hours did it really take? Now, this is a broad question. This person is asking about the actual coding of the strategy, but I want to broaden that out to coming up with the strategy, fine-tuning it, or even, John, building TradersPost. How long does that take to get you up and running?
I think John should answer that question first. For those who are thinking about copying TradersPost and building their own, how much time have we spent on this thing?
I mean, I don't know. I don't know in hours, but it's several years. Like years of experience before I even incorporated TradersPost is the culmination of all of that. So I mean, you may have all the experience, but even after that, we've been working on this for 4 years.
Right.
And I still feel like we're only just getting started. It's a little bit different when you're building a SaaS versus building something just for yourself, because you can build things differently. It's easy to do something for one person. It's much harder to do it for thousands of people all in parallel. So I would discount a little bit for that if you're building it just for yourself. But, you're going to have to learn the hard way about things that you don't anticipate. I always say the happy path of software is easy, but the 1% of fine details of what happens when stuff goes wrong is the part that's really, really hard, because it's hard to know how things can go wrong until you've either experienced it in the past, so you know how to apply it in the future, or you discover it in real time and you learn, and then you carry that knowledge forward with you.
Yeah, I think a lot of the time spent from a strategy perspective is probably most spent early on in the very beginning as you're getting used to the environments you want to work in, you're getting used to where to get data, how to validate that data, how to build the rules for your trading strategy. And then as time goes on, as you get used to those environments, it's much quicker to iterate. But I've probably built 150, 200 different types of strategies, all having a completely different way to look at a trade or a setup and have different rules. Early on, it was definitely way too many rules, 20, 30 rules to decide when to get into a trade. And most of them were just like trailing stops with the exit without any kind of signal for why you should get out. And as time has gone on, it's been dramatically simplified. Now, more often than not, I have maybe 3 to 5 rules for entry, and maybe usually 2 to 4 rules for exit, to really confirm that I'm in the trend as long as possible, or I've correctly identified a reversal and I followed the trend after that reversal. And that gets simpler and simpler as time goes on. There's only a handful of ways to really detect those types of things, so you don't have to write the same code over and over and over again. But still, the environment that I choose to work in is the one I'm used to. I've built a lot of models. I built a lot of strategies on Quantopian, which now I've moved a lot of those over to QuantConnect. And then I have a lot of strategies that I've tested really quickly on TradingView. And that's kind of the nice thing about TradingView is if you want to stand something up really fast and see it on the charts, that's one of the best environments for that.
Yeah. I think if you haven't been doing it for 3 years or more,
Show's over, guys.
If you haven't been doing it for 3 years or more, I find it's like you just don't have enough knowledge to be able to know what you don't even know in order to get there. And anything, even if you've been successful the whole time, it's sort of like the people who thought they were successful because they got in at the bottom of 2020 and then they wrote it for years. Like, I'm a genius. Well, no. And so for me, less than 3 years, you can't really get there. And how many times, I don't know if you've ever been in the situation where you're in the wrong asset class for you. You're in the wrong type of strategy. It turns out, no, you need something completely different. That's what actually appeals to you, and you lose, how much money and all this time going down that one track before you even think to move to the next one. And so, for the strategy development part of it, I find it's like it might as well be like going to school, your high school years, your college years, before you can even get out of that and be like, hey, I have a solid handle on how to begin. But then after that.
Everybody has to start somewhere too, right? I mean, I think you just have to have the expectation that you're not going to know what you're doing. And frankly, no one really knows what they're doing, but people just dove in and started figuring it out and started learning the hard way. And like, you can't wait to no one's going to like give you the information and the knowledge. Like, you have to discover it and learn it for yourself. And it's a painful, long process. It's a marathon. It's not going to happen overnight. I always love the saying, the only way to eat elephant is one bite at a time. You just got to show up and like keep chipping away and just make one tiny step forward every day. And if you do that every day religiously for years, you will be a 10,000 hour expert at some point. But most people give up. They want it overnight. They don't have the like persistence to get up every day and like fail over and over, and they eventually give up. But I think you just got to keep trying.
One thing I would advise of, or at least recommend, this is not investment advice, let me say that again, is early on I had figured out that the best thing to do when taking the time to do all of this work is that if you were to only use the capital you have for these investment strategies, then you're missing out on the market exposure during that period of time. So let's say you spend the next 3 or 4 years developing strategies and you don't have money in the market that whole time. You've lost whatever occurred in the markets at that time. So one of the things I figured out a long time ago was I'd rather put half of my investment capital into the S&P 500 and just compete against those returns. If I can beat those returns, then it's worth the time and effort I'm putting into this. If I can't, then I'm just going to start loading more money into the S&P 500 over time and just take the market averages. But I would highly recommend that if you're going to spend the next 3 to 5 years developing strategies, at least let the market give you market returns over that time and see if you can outperform that.
Mike, I so wish I followed that advice years ago.
Right? Especially on
Oh my
crypto.
God. That's right. I was like, Bitcoin 4,000, that's a lot.
Yeah.
No, I always keep in mind I have this image of somebody that I knew when I was younger who bought 800 lottery tickets. And had like a wheelbarrow of lottery tickets. And I was like, what are you doing? And he's like, well, I figured it out, the lottery, and I'm going to be able to make money on this. I was like, how much did you spend on this? And it was more money than the person had to spend. And I remember thinking that image stays in my head as, oh, well, we can convince ourselves of anything, any strategy, if we think long and hard and we really, really want it. You just have to assume it's going to fail, which, spoiler alert, it did fail.
Right.
That's always the image I have in my head, just a pile of lottery tickets.
Yeah, there's a real life story about a couple of retired individuals that actually did make money on lotteries, but that's because there was a loophole in the lottery system where they were. There's a movie about it called Jerry and Marge Go Large, and it's got Brian Cranston as the main character.
Such a good movie. I love
Fantastic
that
movie. And he was a math teacher at one point. So he used statistics in order to understand if there was an edge in the game, and he determined that there was a real edge. So they went all in on this, and that's sort of the same thing. That had real mathematical expectancy. There was a high probability of winning more than losing in that game. And that's what allowed them to do so well. And because of how popular they made the game, the lottery administrators just continued to let it happen because it was driving so many sales, and they were making more on the lottery than they were paying out Jerry and Marge and their whole group. So they kept it going for a long time. Fantastic story, but again, it's just one of those things where the math checked out in order for that to be possible. So as you're developing strategies, the main thing you're looking for is ultimately that edge. You want something that wins more than it loses, and when it wins, it should make more than it loses.
Okay, so if you're going to watch that movie, definitely add to your list the book from Edward Thorp, A Man for All Markets.
Oh, great book, yeah.
What a wonderful tale for casino to stock market, and it lets you understand that there could be edges to find, but that you can't stay with it. I didn't realize that. Oh my God. He could not stay with the roulette strategy because the game changes as you go along.
That's right.
Really as you win. And the same thing, you'll watch a YouTube video from 3 years ago about the strategy that worked really well. And you're like, well, maybe because it was 3 years ago, market structures have changed, or more than that. So super useful. Definitely pick up that book. That
regimes change. It's why I'm always developing new strategies. Things change. Markets trend differently. Things become bearish more than bullish, or bullish more than bearish. So it's an ongoing quest. It's an active process.
All right, we'll leave it there. I don't think we had anyone. I'll check on Twitter, but I think what we're going to do on Blueprint will be the backtesting with Polygon.
Sounds good.
Let's do equities, perhaps options. Might as well. I have both subscriptions. I might as well do it. That'll be fun. You guys will see. I'll come with like a framework already prepared a little bit, but then we'll also do some AI streaming. AI vibe coding on the stream, so that should be fun. Is there a percent of account risk per trade on TradersPost? Thanks.
Is there a percent of account risk per trade?
An option. Yeah.
So we have percent of equity, but we don't yet have percent of account risk. We have the risk amount, where you can choose an amount risked for each trade, but you would have to update that every day based on your equity. So this is a good feature request. I wanted to throw this out there. I think it's definitely something we could implement.
Perfect. All right, if you guys have any questions in the future, please feel free to post them on X, post them on YouTube, send us a message, post them on Discord. We're always happy to make TradersPost the best automated trading platform in the multiverse, and better still. So with that, we need your feedback and your questions. Until next time, we wish you happy trading.
Cheers, everyone.
Yes.